The interest rate is the price of borrowing money. Like, let's say you need 500 rupees for a year. Though people generally don't take 500 rupees for a year, it's just to show you an example. So, you need 500 rupees for a year. You tell a friend of yours to lend it to you. He agrees, and then after a complete 1 year, you gave it back to him or her. Now, this was simple, but what if your friends or family or relatives doesn't have it? Then you might need to ask someone else, a stranger or bank. I wouldn't really suggest you go to a stranger, and you know why. So you went to a bank. Bank agrees to lend you the money, but since they are troubling themselves by lending you the money, they are going to charge you an interest which you have to give them, pay them along with the principal amount. That 500 plus the interest at the end of the year. But first, do we understand that there is a difference between interest and interest rate? If not, let's just get that confusion sorted out first, shall we? Are they same? Like, what difference does it even make? I can say interest or interest rate. Nothing changes. Well, not exactly. Interest is the amount that you get paid by the bank in case you deposit your money, or if you take a loan, they charge you some amount of money, which is interest. But interest rate is a bit different. It's not exactly the amount you get paid or you pay to the bank. It's the rate at which they charges you in case of your loan, or they give you in case you've deposited your cash with them. Say, for example, you deposited 100 rupees with bank, and here we are taking the case of when you deposit your money with them. So the other case, which would be something like you take loan, it would be the same deal. So now that you have deposited 100 rupees with the bank, they tell you they are going to give 10% interest. That is, they are going to give you an amount which would be the interest along with the principal amount on the basis of 10% interest rate. So here you are receiving your interest as, what is the 10% of 100 rupees? It's 10, right? You are getting 10 rupees as interest plus the cash that you have deposited. And the rate on the basis of which they are giving you that 10 rupees is 10%, which is your interest rate. Somehow, though, the interest rates you receive as a lender never quite seem to be as high as the interest rate you pay as a borrower. But who decides it? Does banks randomly charge you with any percentage of interest rate? Or is there a certain criteria they need to follow in order to do that? Banks are generally free to determine the interest rate they will pay for deposits and charge for loans. But they must take the competition into account, as well as the market levels for numerous interest rates and RBI policies. Because interest rates that the bank charge depends on the repo rate set by RBI, which is the Central Bank of India. Repo rate is the rate at which RBI lends money to commercial banks, thus indirectly affecting the interest rate we have to pay or the bank gives us to commercial banks, and the commercial banks give that to us. The rates depend on which type of loan you're taking as well. There are basically two types of interest rates: fixed and floating interest rate. Fixed interest rates are, as the name suggests, fixed, meaning if you are paying 10% interest rate over a loan of 1000 rupees, then you continue to pay only 10% interest rate over it till you finally give the loan back and return it. However, Floating interest rate is different. There you have to pay different interest rates depending on the market condition and also has higher risks. One of the other interest rate determining factor is the tenure for which you are taking the loan. Suppose you take a home loan for 5 years and your friend took it for 3 years. In this case, you are paying less interest rate over the loan than your friend. Also, there is another factor into play, which is your credit score. When you apply for a home loan, the bank will always look at your credit score that is provided by credit rating agencies such as CIBIL. This lets the bank know of our credit worthiness and assess whether you are a high risk borrower or not. The higher your credit score, the better the home loan interest rate you can get. Your credit score is based on your payment history, credit length, and total level of debt, etc. These were some of the important and primary determining factors through which bank sets your interest rates. Same can be true for vice versa. Now, you must have also understood why you need to know about the interest rates set by banks. Of course, if you want to take a loan or you deposit some money into the bank, you should know whether you're getting the right interest rate or not. Due to RBI repo rate and policies, there are transparencies so that you know what you have to pay and what you have to get. I mean, in the sense of interest rate, of course. So that was all about interest rates, and its types, and how you should know about them. Thanks.